Hi guys, welcome back. I am really appreciative that you guys are spending so much time with me. This is going to be our last video for our three-part series, and we're going to talk about my watch list number 2 for 2018, which is Taiwan Semiconductor Manufacturing Company, TSMC, right? Okay. Before we begin, I just want to say thank you for those who have commented on video 1 and 2, which is my 5 golden rules to investing, and also our first watchlist stock, which is Tencent Holding. If you have missed the two videos, you can just click the link down below and view them back again, right? Many people are asking, like, Tencent, it seems to be trading at a very expensive price, so should they be really buying that stock at this price, right? Of course, our watchlist stocks are not recommendation. It's just a view, my own personal view, right? But if you ask me today if I'm going to buy Tencent, I would most probably say yes again, right? Because even when about 3 years ago when I started buying it, its P was also around 70 to 80 times, which is even higher than what it is now. But I came to understand and realize that when it comes to a very high quality business and quality business that have proven that they are able to grow very fast, sometimes I place less emphasis on the valuation, right? As value investors, sometimes we place a lot of emphasis on valuation. I think maybe sometimes a bit too much on valuation, but as you have seen on my first video, one of my rules are valuation is only a guide, right? So I believe when it comes to the higher the quality the business is, I tend to have lesser emphasis on the valuation. And when the quality of the business is much lesser, at that instant I'll have a higher weighting on the value of the company. So that's my thought on it, right? And someone has also asking, she's just starting out in investing and it's very confusing. I can remember that when I first started out, it was a very confusing experience as well. So how do you actually start investing, right? Interestingly, I think when you're starting investing, you should not be rushing into looking at the stock price of companies and looking at chart of the stock price, but rather try and learn more about what a business really is. Especially if you maybe have not much interaction with understanding what a business is, read more books about it. Just online search like how do you differentiate a good business and from a bad business. Start from there, and then I would say start to keep a notebook. It can be physical or it can be just an app on your phone. What I do is every time in my daily life, when I come across an interesting company that maybe some friends talk about, or I read it on the news or on the web, I will just write down the company name first. And I'll spend like 2 or 3 weeks, just understanding the company, understanding what the business model is like, how they are making money, and what's the growth prospect and the risk of the company really is, until to a point where I feel that I'm comfortable knowing the company enough, and I feel comfortable being a shareholder of that. Then I'll look into the valuation and see if it's the right time for me to start buying, right? That's how I get started. So don't rush to buy your first stock, but rather spend some time, sometimes can be months, just to build up your knowledge and confidence about investing and about companies, and just start building a watch list. Personally, I have a watch list of maybe more than 20 plus company, where I just monitor them on and off years after years, and I don't invest in a company straight away after I know about them. Sometimes it takes me about 2-3 years before I started investing. I know about Tencent, say I think more than 6-7 years ago, but I at the time I was just not confident of the company, and it takes me a long time. It takes me about 3-4 years to finally get comfortable with the company and starting to invest in it. So don't rush into buying your first stock, right? And also I just want to let you guys know that we are launching the full watchlist 2018 soon. Actually, keep an eye on an email tomorrow where we'll talk more about that, and it will be launched in conjunction with our grand webinar 2018. We really hope we can build a strong community of value investors I'm already getting a very high quality question from you guys. Actually, from the survey that we sent out, we have more than 300 questions from you guys. I'm just trying to go through all of them, and I try to answer as many as I can. So of course, I'm not gonna be able to reply to all today in this video, but I'll try to reply to all of them as often as I can, right? So do keep in mind that our grand webinar 2018 is coming, and keep an eye out on the email tomorrow. So Taiwan Semiconductor Manufacturing Company, right? I think that this might not be a company many people might be familiar with unless you are in the semicon industry. So TSMC is actually a company that was introduced to me by a friend that is a great investor, and is an investor that I deeply respect and admire. And he told me about TSMC and really piqued my interest. It took me some time to get to know the company and gain confidence in it. So, but once I truly understand what the prospect of TSMC is, really get me very excited, and that's something that I want to share with you guys. So basically, TSMC for short, they are the largest company listed on the Taiwan Stock Exchange, right? So it's a Taiwanese stock, and they also have ADR listed in New York, and they are actually quite a very big company, a company worth about 200 billion in US dollars market cap, right? And it's one of those, I will classify it as one of the best income stock that I have ever come across. So what is TSMC? So basically, in the semicon industry, there's basically three types of supply chain. So you have the fabless and IC designer, where the people who they design the chip, people like Qualcomm or Nvidia, your graphic cards. Those are the people that do the designing, right? And you have what we call the foundries, where they are basically the outsourced manufacturer for these designers. So people like Nvidia, they don't even have a factory to manufacture their chip. They come to people like TSMC, which is the largest foundry in the world, and they say, hey, can you help me manufacture this product? And this is what TSMC is providing. And after TSMC manufacture the chip, they will send off to testers and assemblers like Statchip Pack or Amkor to do the final assembly, right? But there's also another group of people in the semicon industry where we call the IDM, the integrated device manufacturer. These are the people who are able to do the whole stream by themselves, right? And there's only two big guys who are IDMs, basically Samsung Electronics and Intel, where they are the guys that they can do the designing and the manufacturing together, right? So why is TSMC so special? So in the beginning, foundry business is highly fragmented, right? Maybe 30 years ago. But over the past few decades, there has been a huge consolidation, and TSMC today is actually the largest foundry in the whole world, having more than 50% of the market share of the contract manufacturing, right? So they are the big guys in providing all the chips that you get all around, right? And I think because they have such a huge market share, they are able to be also one of the premium providers, and they have very strong pricing power on their side. Their net margin is actually more than 30% consistently for the past many years, which is very surprising to me actually when I first come across it, because everyone tends to have this misconception that semicon industry is a cutthroat business and the margin is very slim. It's true for almost all its other competitors except TSMC. So it kind of shows us how big of a pricing power this company really has, right? And its net income has actually been compounding by more than 30% year on year since 1991, right? And it has been able to grow at such a huge pace and yet keep a very strong balance sheet, which is what I really like about them, right? And so what is so special about TSMC? I think basically there's three main things that's very special about them. Number one, they are relentless in their R&D, and they try to keep up with the leading IDMs, which is Samsung and Intel. it's a huge capex business, and TSMC actually spends more than 10 billion US dollars a year on capex. The only other two companies that is able to spend more than TSMC is Samsung and Intel, right? All the other guys have already kind of dropped off the space, and so they're not able to keep up with the newest technology if someone wants to manufacture a high-end chip. So TSMC is sort of the only guys left that's able to do that, right? And number two is they are very clear on what they can do and they don't do. So they never compete with their customer directly. Unlike Samsung, where they sort of manufacture for others, but then they also design chips that and sell their own chips to compete with the customers, and which is one of the key reasons why Apple actually switched out from Samsung and moved to 100% of its manufacturing for the A11 chip to TSMC, right? So TSMC sort of become like the only choice for high-end fabless IC designers, right? And they have a good track record of very high customer service and being aligned with the customers, and I guess that helps build loyalty among its customers as well. And this company, although it's already so big, I tend to see that there's a lot of opportunity that is still available for this company, right? You know, smartphone, although it has been with us for many years, it's still a growing industry, and many other countries are still growing their smartphone penetration. And now we're talking about other new industry that could be the next growth for the technology industry, like things like Internet of Things, cloud computing, big data, AI. So even now people are talking about blockchain technology, although blockchain might be a short-term bubble, but it could potentially have a huge long-term potential on the technology itself. So all these things will provide TSMC with the future growth potential, because all these things need to be connected. They need to be there are electronics that need to be connected with each other, and it just means that the world is gonna have more chips all around in the future, and TSMC being the biggest guy that manufacturing the semicon chips, so they are in a great position to take advantage of that. So I think TSMC is definitely a company that you should really take a serious look at, and it's one of the tech company that's actually quite reasonably priced. Its price to earnings is only around 17 times, at 17 to 18 times, and if you net out their net cash, that's even lower, maybe 15 to 16 times, and they're actually giving out the 3% dividend yield. Even the management has sort of indicated that they are quite confident that they are still going to continue to grow in the future. So I would say this is quite a strong and stable income stock, and it's definitely one that if you are interested in income stocks, you should be looking at TSMC, right? So I hope that's a good short introduction about TSMC. And if you guys have any question, just ask down below. I'll try to go through all of them as possible. And also your survey question, we've been getting more than 300 questions from you guys, and I've been just reading through all of them, and I'm really excited to share more interesting dialogue with you guys, and I saw many interesting questions inside. One of the key questions I think I would like to take some time to answer is how do you build up a portfolio? So if you think about it, we mentioned it in other of our courses, or in our articles, where we feel that there's basically only 3 types of value that a value investor can get in the stock market, right? It's the asset value, income value, and also growth value. We talked extensively about that in our book. So number 1 is net asset, and net asset value is really when we find a company where it's trading very cheaply to its net asset value, say a property company where it's trading just 50% of its equity price. and that's something that we feel that's have value for the investor. Number two is income value, where I would say TSMC is a classic example where company with very strong income and stable growing income, and it's something that income investor is very attracted to. And lastly is growth value. This is a company. This is the type of company such as Tencent, where it has the huge potential of growing into a very large company in the future. Although it's already a very large company, but the potential is still huge for the company. So this is what we classify as growth value companies. So when you think about it, there's only these three types of company to invest in the stock market, regardless of how many stocks there are in the stock market. So you're basically just trying to build your portfolio according to the percentage of these three types of asset, right? So for me personally, I like to be more conservative. I tend to invest very conservatively. So a huge bulk of my portfolio are income value stocks, where maybe 50 to 60% of them are in incomes. So these are company that I can, once I understand them, I can buy them. I don't need to watch them too seriously, too closely. They tend to have a very stable earnings year after year, and I just reinvest those dividends year after year. And then the other two, asset and growth, I'll try to split them up evenly, where I have a basket of asset companies and I have a basket of growth companies. So where I can take a little bit more risk with my portfolio. So that's how I build my own portfolio. But building a portfolio is very personal. It's something that we're going to talk about in our 2018 grand webinar as well. Is basically finding out what is your own objective or why you're investing. And when we take a step back, really, we have to think about why are we investing in the first place, right? Most of us want to reach financial freedom, but what does that mean for us? It means that we have the freedom to choose whatever we want to do, or maybe just build a safety net for our children, right? We want them to be able to try things in the future, but not be afraid to fail. At least you already build up a nest egg for them, just in case if they fail in life, and they have a safety net to fall by. So that can be our motivation. We just think about we have to understand why we do that, and a lot of times, sometimes people overthink what investing is really about, and they feel that it's very complex. But actually, over the course of a lifetime, sometimes you just need one or two stocks that is a multi-bagger for you, and you will reach your financial freedom goals. Sometimes we are just one stock away from our financial future. But investing is I understand it's super confusing, and it's a very lonely journey. In fact, I started out investing by myself because I'm an engineer by train, and I do not know many people who are investing at that time. And it's only after I get to know my co-founders of Value Invest Asia that I truly have the friendship of investing together, and that really brings my investing skills to the next level. Because we can share ideas, and we can just criticize each other's idea, and we can learn from each other. And so we really hope we can create that close-knit community for you, where you can share your ideas without judgment with each other, and just grow together as a group, right? So that's all for our three-part series video. Do watch out for our email tomorrow morning. I'm really excited to share with you what we have planned for you in the 2018 grand webinar, and also the release of our watch list 2019.